you guys can see this verbally.
Yeah, it looks good. Looks good. Yeah.
Yeah, it looks good. Looks good. Yeah.
Excellent. And so one of the things I wanted to talk about a little bit today was some of the tools and resources we have to help you as real estate professionals. But I'm not, going to talk a lot about products today, but one of the things I just wanted to touch on a little bit today was the Purchase Plus Improvements program. And the reason why is that, as you know, it's completely bonkers right now for real estate. And so just as an advice piece, especially if you're working with first-time home buyers, that really are having a hard time finding what they're looking for, especially in these times when MLS supply is so limited. Purchase Plus Improvements is a great option for customers to consider. If they need to maybe buy something that's not exactly their dream home, they can roll the renovation costs into their mortgage, which is super helpful, especially for first-time home buyers that are typically putting all of their savings into the down payment. So this will allow them to get those renovations done sooner and be able to better afford them. One of the tools that we have to help you with the Purchase Plus Improvements product is we have a lot of guides on our website that are super helpful for information that you can provide to your clients. And so this document here is all about Purchase Plus Improvements. And so just for yourself, if you've not had very much experience with Purchase Plus Improvements, typically speaking, folks are doing upgrades to their kitchens, bathrooms, anything that's going to add value to the home. And if we're just looking at kind of what the finance looks like on this, this is an example of maybe somebody who's trying to do a $400,000 purchase. And, they want to do a $30,000 renovation to update maybe the kitchen. And in this case, the example is install some draft-free windows. So what this shows you is that your customer really is only needing to come up with an extra, $1,500 on their down payment in order to be able to do that, roll the whole cost into their mortgage. And so one of the things that's kind of a hot topic as well with this program is doing energy efficiency upgrades. And so what that could look like would maybe, replacing the windows, maybe looking at new hot water tank, stuff that, is going to make their home more green. This is really popular. And the cool thing about that, when you're working with an insured, a Sagen insured file, is that we have an energy efficiency rebate program. And so your customers could get back up to 25% back of their mortgage premium when they're doing an energy efficiency upgrade. So, in this example that we were looking at here, their premium is, around $16,000. So, getting 25% back on that cash is pretty sweet advice if they weren't aware they could get that money back. Consumers have up to 2 years to apply back to Sagen for their rebate. And then there's all the other rebates folks can get back as well through Fortis. So it's a lot of money that they can get back, and I'm sure they'll be really happy that you gave them that advice. And certainly if you're working with somebody who's buying a new build insured, that's a very easy rebate to get back because typically speaking, a lot of the new builds are, already built to code. And so that's a really easy rebate. Maybe I'll just pause. Does anybody have any questions about what I've talked about so far or anything about the rebate program? Has anybody ever utilized that before? Or? No? Okay. So did you have a question? No? Okay. Sorry if my sound's a bit off. Another thing I just wanted to mention that's become very popular since the onset of the pandemic for product this year was the use of the vacation secondary home program. So that would be buying a secondary property or a vacation property with less than a 20% down payment. Since the onset of the pandemic, we've actually seen a 35% increase in the usage of this product. And so, you know, we're seeing a lot of folks looking for more space, buying secondary homes in markets that they don't necessarily live in, high ratio. And then with the inability to travel, I think is another reason why we've seen folks being interested in buying vacation properties. And then, you know, with the rates being as low as they are, maybe utilizing their investments elsewhere and putting a smaller down payment on a vacation property or a secondary home. So just keeping in mind that it is possible with Sagen to have up to 4 insured certificates. I believe with CMHC, consumers are limited to 1. And so if you're working with somebody that already has an insured mortgage and wants to buy a secondary property, that could still be possible, insured and having multiples, if that makes sense. One of the things I wanted to show you today as well is I had mentioned we have a lot of marketing materials. I pulled up the one on Purchase Plus. We have this platform here called My Marketing Source. And so this is a free tool that we have. All you have to do is make an account at mymarketingsource.ca. And what it allows you to do is brand yourself to our content. And so I just wanted to show you kind of an example of what you can do here. And so let's say you wanted to make a marketing piece. You can actually go here. These are a lot of our content that's already created. So instead of creating the wheel, let's say you could come here and brand yourself to our first-time homebuyer guide, the Purchase Plus Improvements guide I had pulled up, or let's say you're looking for some content to send out. I'll just pull up 10 closing costs for homebuyers. So here, you can you make yourself a profile. So let's say I want to have my headshot here, and then I hit preview. If it will load. Oh, so I add my headshot, pardon me. I hit preview, and here I've branded this content to myself. So, you know, this can be handy if you do want to brand any of our content to your own brand. You can write out notes about your business on the side. You can share these on social media or with your customers. But I thought I'd mention it as it's free, and there's a lot of really great content here that you can use for your business. Does anybody have any questions about this? I think this is awesome, but I encourage you to have a look at this. No questions? Okay. So, I mean, really, I just wanted to mostly give you an update today on our rebrand. Just a couple of products that have been utilized a ton since the onset, which was Purchase Plus and Vacation Property, and show you My Marketing Source. Just one more thing about some of the tools that we have here for you. Under this industry insights, we house a lot of other content here that you might find interesting. And one of the things that we have here are our digests. And we publish these, I guess, twice a year in the fall and winter, and then spring, summer. So this is really great content that you can also share with an email as a follow-up. But for you this week. And then one is sorry, a learning center there. And right now is Home Ownership Education Week. And so we're running a lot of really good webinars this week. We did a real estate roundtable with Phil Soper on earlier in the week. There was an update with Equifax on Tuesday. Tomorrow we're running our first time homebuyers study. So if you are interested in those or any other courses, you can go up and sign up for our webinars there as well. And I'm sorry I can't pull it up. I don't know where you guys went. Are you still there?
Yep. Still here? Yep.
Yep. Oh, here? Yep.
Okay, sorry, I don't know what's going on with my Zoom connection. It's not good through this for some reason.
Oh, no problem. No problem. Was there any other
Oh,
questions?
no problem.
Yeah.
No problem. Is there any other questions that anybody has?
What? The world is melting. But you guys, my phone has an emergency alert as well, so that's good. Joel, is there anything else that you wanted me to touch on today? I don't know. If you had anything else you wanted to talk about?
Yeah, I mean,
I think it's really important to know is that
like
are mentioning, oh, they're waiting on CMHC. It's
they're waiting on CMHC.
And just know that when someone gets turned down from
a bank,
so that community can still be approved.
even after they get turned down. That's a big thing as well.
I also wanted, Lisa, can you clarify if there's any renovations that can't be included?
I would say that typically speaking, we're open to most types of renovations. The one thing that we get a lot of questions on is like appliances, stuff that can be moved like that is not really suitable for Purchase Plus. We're really looking for things that add value. So like sometimes people want to add a swimming pool. You know, if it's the right property, we'll allow it. But again, we're looking for things that add value. Sometimes we get files where the properties are essentially inhabitable. Those types of properties are not suitable for the Purchase Plus improvements program because it has to be marketable in the state that the home is currently in. So if it's something that's really, really run down and is basically not livable, unfortunately that wouldn't be suitable for Purchase Plus either. Needs to be marketable as is. So we get that question quite a bit too. If you're working with a home that needs a ton of work, you might be able to submit it through more of a progress advance type of situation, but I guess it would just be on a case-by-case basis. We are seeing a lot more progress advance files this year, I think as a result of the MLS supply being quite limited. Typically speaking, you know, insured progress advance files, we haven't seen as many as we have this year. I think this time last year I had maybe five files on my desk. This year we have about 100. So people are looking to build, I think, a little bit more. And you would be there. It is possible to do an insured build. We see a lot more builds happening on with manufactured homes people buying the land and then doing an insured build with a manufactured home company. If you're working with anybody that wants to do that, you just want to make sure if it's insured that the builder or the manufactured home company is an approved builder or manufactured home. They need to be licensed with the new home warranty. So that's very important to know if you are working with somebody that wants to do an insured build or with a manufactured home company.
What do you think are the reasons, Lisa?
What do you think are the reasons, Lisa, why it's turned down by you guys?
By the main reasons, pardon me, Joel, for?
Yeah, what are the reasons why you guys?
Yeah, what are the reasons why you guys make turning down insurance for somebody?
Decline a file just in general?
Yeah. What are the biggest reasons these days?
Yeah, what are the biggest reasons these days?
Oh, so I mean, when we're underwriting files here at Sagen, we try to do a very holistic review of the application. And so when we're underwriting a file, we're always kind of focusing on those 5 C's of underwriting, right? So character, collateral, which is a property, capacity, credit is obviously huge. And then, as always, pretty much common sense comes down to it. I would say right now we're seeing a lot of challenging files due to probably the big thing is credit. I would say typically when we're looking at a decline, folks that are very maxed out on their, getting tight on their debt servicing ratios. Sometimes it's people with thin credit or but I would say probably the main reason for decline would be credit and elevated ratios. But I mean, sometimes we might see the odd property decline. Joel, I'm sure you've experienced a property decline before, which can be upsetting. But typically that would be our risk team would determine that property was not marketable. It could be in the state that it's in, or maybe it's in an area that is considered not as desirable. But I would say it'd be a good combination of credit and collateral reasons for decline typically. I don't know if that helps, but we're always, if you're ever working with somebody that might have a maybe a lower credit or one aspect of those 5 C's of underwriting, we're always looking to strengthen the file to offset one risk with another. So maybe we'll look at co-bors or other ways to strengthen a file if one of those 5 C's is weaker. It's all about mitigating risk really when it comes to underwriting.
Great. We'll just if there's any other questions.
Great. We'll just if there's any other questions before we sign off here, you just put them in the group chat.
So was there anything else, Joel?
No, that's great. Thank you so much for your time. Thank everybody that came along. We totally appreciate that. I know with the lenders I use, we use Sagen more than any other insurer. So, and Lisa's super accessible to me. So one thing that I do as a mortgage broker is that, it's important to me that if somebody ever gets turned down, that I know why, so we can explain to you as a realtor. And so that's something Lisa's really great at, always kind of keeping me in the loop on those types of things. So if there's any files we can help with, we're certainly keen to do that. And, thank you, Lisa, for giving some time today. I appreciate it. And scenarios, please do reach out.
Yeah, Joel's a very good partner of Sagen's, and so we really appreciate Joel's partnership at Sagen. If there's anything I can ever do to help you, please don't hesitate to reach out to me as well. Thanks again, Aaron, for inviting me, or Joel and Aaron. Thank you.